the debt trap is sprung. And I think this is part and parcel of why prescient central banks have been accumulating gold.
You're watching Silver News Daily. Subscribe for more.
Did you know that the price of silver could skyrocket in 2024? Yes, you heard that right. Imagine a surge so significant that it catches even the most seasoned investors off guard. Alasdair Macleod, a leading expert in precious metals, is breaking down the key economic factors that could trigger this massive rally. From central banks stockpiling gold to a potential shakeup in global currencies, the stars seem to be aligning for a silver boom like we've never seen before. But what exactly could send silver prices soaring? Stay tuned as we dive into the surprising catalysts behind this explosive forecast and why every silver stacker should be paying close attention.
Looking at it from Warren Buffett's point of view, I'll be looking at the prospects for inflation and therefore interest rates. Now, we know that the headlines are full of interest rates are due to fall by 0.5% or 0.25% or whatever. But all this presupposes that the inflation problem is done and dusted, but it's clearly not. Also, if I was Warren Buffett, I'd be looking at international flows of capital and seeing that the foreigners are basically selling down the dollar, which will weaken the dollar. And if you look at what the dollar is doing, you can see that a weaker dollar is going to require higher interest rates to stabilize it. While, a little bit of a drop in the dollar you can tolerate and all the rest of it. And, the Keynesians would probably welcome a little drop in the dollar because it might support the economy. Ha ha. But you can see that there are a number of reasons why an assessment by a really experienced investor such as Warren Buffett might suggest that there's a lot of risk in the banking sector, more risk than the share prices would indicate. So on that basis, I can understand why he would reduce his holdings. The problem with interest rates, as far as the banks are concerned, is that I think it would reveal a huge, great quantity of bad debts. I mean, you've got all these zombie companies who have borrowed cheap finance when you had rates at the zero bound. And now, of course, they can't afford to refinance their position. It's just, they really are in an appalling position. And it's not just in America, this is all around the world. But the problem really is enormous for the banks because there are going to be huge, great problems. The banks presumably will require some sort of rescue if this really does deteriorate. And on that basis, do you really want to have all your eggs invested in a bank? I don't think you do. So I can understand why he's perhaps. It could be the reason that he's loosening up on his Bank of America hold.
To truly understand why silver might be on the verge of an unprecedented rally, we need to look at the broader economic landscape. One of the most significant shifts happening right now is the rise of the BRICS nations, Brazil, Russia, India, China, and South Africa, who are challenging the dominance of the U.S. dollar. These countries are exploring the creation of a new reserve currency, potentially backed by a basket of their own currencies, or even by tangible assets like gold and silver. This move, if successful, could disrupt the global financial system as we know it. Think about this. The U.S. dollar accounts for almost 90% of all currency trading and has been the dominant force in international finance for decades. But with ongoing U.S. sanctions on Russia and China and a simmering trade war, the BRICS nations are looking for ways to assert their economic independence. If they succeed in launching this new currency, it could significantly weaken the demand for the dollar, a process known as the dollarization. This shift could send shockwaves through the global markets, driving investors to seek refuge in safe haven assets like silver. Moreover, the dollarization trend isn't just theoretical. In 2023, nearly one-fifth of oil trades were conducted in non-dollar currencies, a stark contrast to the near total reliance on the dollar in previous years. If this trend continues, we could see a major reallocation of wealth into precious metals, with silver being a prime beneficiary due to its affordability and historical role as a monetary metal. But it's not just about a new currency. The geopolitical tensions between the US, China, and Russia are creating a sense of economic uncertainty that is pushing more and more investors towards tangible assets. Silver, with its dual role as both a precious metal and an industrial commodity, stands to gain immensely from this shift. Now, what does this mean for you? Well, if these global economic dynamics continue to unfold, we could see a surge in demand for silver, driving prices higher than most people would believe possible. And that's not just speculation. It's a reaction to very real economic forces at play. So the big question is, are you prepared for a potential silver boom driven by global economic shifts?
The one thing I would say is that the idea that the Fed and the US Treasury would allow banks to go bust, and particularly major banks, is extremely unlikely. They will replace contracting bank credit by expanding government credit. So what happens is that your deposit in the bank may well be guaranteed, and I'm not talking about, if the bank goes bust, there's, you get bailed out by sort of a massive joint fund. The problem, I think, is that your losses are going to be in the dollar rather than on bank credit being if you like, expiring, being not honoured. So that's the way I'd look at it. Banks will be rescued. I mean, we saw this when we had a number of small regional banks a bit over a year ago. There were no deposits lost. I mean, basically, the whole thing was engineered in such a way that they were taken over. The Fed stopped the run, if you like, on valuations by saying we will permit banks to value, their bonds at, sort of full value, whatever they came up with means, if you like, to stabilize the system. They'll continue to do that, but it will be at the expense of the dollar. So that, I think, is really what depositors should be considering. Do they actually want dollars? Do they want deposits in dollars? Do they want credit measured in dollars, and dollars themselves at credit? So this is why I feel that the question they should be looking at more is, shouldn't we get out of credit and get into real money, which of course is gold? And this is part of the reason I think the fear factor is now driving the gold price higher, which actually is not so much gold going up, but it's more the dollar going down.
Central banks around the world have been on a gold buying spree, amassing record amounts of the precious metal. But why is this happening? And what does it mean for silver? Let's break it down. In the past few years, central banks have collectively added over 800 tons of gold to their reserves, with countries like Russia, China, and India leading the charge. This is a significant shift from the past when central banks were net sellers of gold. What's behind this sudden change? The answer lies in a growing distrust of fiat currencies and a desire to diversify reserves away from the US dollar. Gold, often seen as the ultimate safe haven asset, is being stockpiled to protect against the risk of currency devaluation and economic instability. But here's the catch. As central banks focus on hoarding gold, the spotlight is also turning to its more affordable cousin, silver. Unlike gold, silver has a smaller market, making it more volatile and sensitive to shifts in demand. This means that even a small increase in demand can lead to a significant price surge. Consider this. In 2022, the combined central bank gold holdings of the original BRICS nations, plus Egypt, accounted for more than 20% of all the gold held in the world's central banks. Russia, China, and India rank among the top 10 countries for central bank gold holdings. But while their focus has been on gold, the industrial and monetary attributes of silver make it a compelling addition to their reserves. If central banks start turning their attention to silver, even marginally, it could lead to a massive revaluation of its price. But why would central banks be interested in silver? For one, it acts as a hedge against inflation, much like gold. Additionally, silver is essential in various industrial applications, from electronics to renewable energy. As the world shifts towards greener technologies, The demand for silver in industries like solar panels and electric vehicles is expected to skyrocket. This scenario creates a perfect storm. Central banks looking to diversify away from the dollar, the looming possibility of a new reserve currency, and the rising industrial demand for silver. All these factors point to a potential surge in silver prices, as both investors and central banks seek to secure their wealth with tangible assets. So, what's the takeaway? Central banks are quietly preparing for a potential financial upheaval by stockpiling precious metals. While gold has been the main focus, don't be surprised if silver becomes the next big play. With its unique properties and growing demand, silver could become the go-to asset for those looking to protect and grow their wealth in uncertain times. Are you ready to take advantage of this potential shift?
And they're clearing out the market. Of particular importance is the Chinese consumer, who has a savings rate of roughly 35% of his income. That is huge. It's around about $6 trillion. The question is, where does that go? It's not going into property. It's not going into stocks. It's going into bank deposits. The rate on bank deposits is being reduced recently, so some of that on the margin is going into gold, and it's going into gold accounts at the banks. And it's the banks that are coming into London and effectively taking any loose bullion they can get their hands on. And so this has created something of a crisis within the paper markets, which we're seeing today. We have had a massive breakout on the upside for the gold price, and the swaps, who are bullion bank trading desks, are caught short. I mean, roughly the contracts on COMEX, you've got around about 530,000 contracts. The swaps are the largest portion on the short side by a long chalk, and consequently they are being squeezed. And I would not be surprised to find that they turn tail and are forced to buy back those contracts in a rising market for gold prices, which could actually accelerate the price of gold very, very rapidly. But other than that, really, the thing that's driving it is principally loss of faith in fiat currencies, and particularly the dollar. If you look at the trade-weighted index for the dollar, that's got what the technical analysts call a death cross, which basically is a very, very bearish sign. We had the death cross a week or two ago, and I think it's rather signaling that the dollar's trade weighted will fall from around about 101 at the moment, probably through the 100, and then the next stop is around about 90. This is a very major move down. The
U.S.-China trade war has been dominating headlines for years now, but its implications go far beyond tariffs and trade deficits. It's reshaping the global economy in ways that could have a profound impact on silver prices. Let's dig into how this geopolitical conflict could trigger a silver rally in 2024. First, it's important to understand the scale of the U.S.-China economic relationship. The two countries are the largest economies in the world, with China being a major supplier of goods to the United States and the U.S. acting as a key market for Chinese products. However, escalating tensions, sanctions, and tariff hikes have strained this relationship to the breaking point. Former President Donald Trump has already doubled down on his stance, threatening to impose a staggering 60 to 100% tariff on Chinese imports if elected again. This kind of economic warfare could send shockwaves through global markets, leading to a massive reshuffling of supply chains and financial assets. As both countries gear up for this economic standoff, investors are seeking safer, more reliable assets. This is where silver comes into play. With the global economy on edge, any further escalation in the trade war could disrupt financial markets, causing investors to flee from riskier assets like stocks and bonds. Historically, during times of economic turmoil, precious metals have been a go-to refuge for investors. While gold is often the first choice, silver has proven to be a more volatile and potentially more rewarding alternative. But there's more to the story. The trade war is not just about tariffs. It's also about technology and resources. The US and China are both racing to secure key materials for their technological advancements, and silver is crucial for many of these technologies. From 5G infrastructure to renewable energy systems, silver's industrial demand is set to grow exponentially. This means that any disruption in the supply chain caused by the trade war could lead to a significant spike in silver prices. Furthermore, China is one of the largest consumers and producers of silver. If the trade war leads to stricter controls on exports or disruptions in production, we could see a supply crunch that pushes silver prices even higher. Combine this with the potential for increased demand as investors seek safe haven assets, and we have a recipe for a massive price surge. Now let's add another layer, the potential decline of the US dollar. As the trade war heats up, countries around the world are looking for alternatives to the dollar, especially for trade with China. This de-dollarization trend could lead to a weaker dollar, making silver and other commodities priced in dollars more attractive to investors globally. So what does all this mean for you? If the trade war between the US and China continues to escalate, the resulting economic uncertainty could drive silver prices through the roof. With its unique position as both an industrial and a precious metal, silver stands to benefit from both increased demand and potential supply constraints. This is a situation that no serious investor can afford to ignore. Are you ready to position yourself for a potential silver boom?
Very, very uncertain times. Normally, you would expect funds to flow into dollars, which are seen as safety. They're not. They're flowing out of dollars, not into euros. Well, I mean, there's a little bit on the margin. A bare closing maybe euros, yen, sterling, and so on and so forth. But it's basically going into gold. And I think it will spread from that into other commodities. We've had weak commodity prices recently. I think they've weakened too much. Silver has really caught a bid. That's been rushing up and has got a long way to go. I mean, looking at the moment, the gold-silver ratio is 84. It was 85.5 this morning. That should fall, I think, towards 70 and below, which tells me that silver is going to be a lot more powerful in its up move than gold. So, but it's being driven by gold. So the whole thing has got a developing air of crisis in the markets, I think. And I would go back to what I was saying about Warren Buffett's position. I mean, if you look at the inflation outlook, interest should not fall. They should actually be rising. But the problem is that the underlying economy, US economy, is not performing well. And I don't know whether you noticed this. I think it was yesterday, the budget deficit for August was released, and that was about $380 billion, about twice the level which it was during the COVID crisis, when there was no income coming into the government and accelerated payments out. I mean, this is a very nasty shock, and it tells me that the US economy has run into a brick wall. And by way of confirmation, we have also had information this week about the Chinese economy, which tells us that has slowed very rapidly. And on the production side, that again has run into a brick wall.
Inflation is a term we've all heard before, but its impact on silver prices is something worth diving into. As the cost of living rises, so does the allure of precious metals like silver. But what's the connection between these two, and why is inflation such a powerful driver for silver prices? Let's start with the basics. Inflation occurs when the purchasing power of a currency declines, leading to higher prices for goods and services. This can be triggered by several factors, such as excessive money printing, supply chain disruptions, or increased demand for goods. Over the past few years, we've seen all these factors come into play, pushing inflation rates to levels not seen in decades. In the U.S. alone, inflation soared to 8.4% in 2022, a dramatic increase from the mere 0.3% seen in 2020. So, how does silver fit into this picture? Historically, silver, much like gold, has been considered a hedge against inflation. When the value of paper money declines, Investors flock to tangible assets that maintain their value over time. Silver, being both a monetary and industrial metal, serves this purpose exceptionally well. During periods of high inflation, the price of silver tends to rise as investors seek to protect their wealth from the eroding value of fiat currencies. But there's another angle to consider: the relationship between inflation and interest rates. When inflation rises, central banks, like the Federal Reserve, often respond by increasing interest rates to curb economic overheating. However, higher interest rates can lead to economic slowdowns, increased borrowing costs, and even recessionary pressures. In such an environment, the appeal of holding non-yielding assets like silver diminishes. But here's the twist. Recently, central banks have been more reluctant to raise rates aggressively due to fears of triggering a recession. This has created a scenario where inflation remains high, but interest rates stay relatively low, a perfect storm for silver. Furthermore, during inflationary periods, the costs of mining and production for metals like silver also increase. This reduces the supply, as it becomes more expensive to extract and refine silver, leading to upward pressure on prices. At the same time, the demand for silver in various industrial applications, such as electronics and solar panels, continues to rise, creating a supply-demand imbalance that could drive prices even higher. And let's not forget the impact of geopolitical factors like the Russia-Ukraine conflict. This has already disrupted global energy markets, contributing to inflationary pressures worldwide. As energy prices soar, so does the cost of mining operations, again pushing silver prices up. Now, what does this mean for investors? If inflation continues to outpace wage growth and erode savings, more people will turn to silver as a way to safeguard their wealth. This could result in a significant influx of investment into silver markets, further driving up prices. So, whether you're worried about your purchasing power shrinking or looking to diversify your portfolio, silver could be a powerful tool in your investment arsenal. The question is, are you ready to leverage this opportunity before the full impact of inflation hits? Because when inflation runs wild, those who are unprepared could see their savings lose value rapidly, while those who have invested in silver might find themselves in a much stronger financial position.
Why has it run into a brick wall? Well, I mean, people who hate China say, well, it serves them right and it's the Chinese economy, it's their mismanagement and all the rest of it. But that's not really the case. The case, as far as China is concerned, is their export markets have collapsed. Their major export market is the US. The consumer is not buying. There are problems. So you can see that this sudden crisis, if you like, in government debt in the month of August, which incidentally takes the government borrowing, the interest on debt, to an estimated 1.2 trillion for this year, higher than defense spending, I think. I mean, this is a debt trap. And the last thing that America wants is a stalling economy, because they will not be able to pay their debts. The debt trap is sprung. And I think this is part and parcel of why prescient central banks have been accumulating gold. I mean, we talk about the America's loss of influence and the Asian hegemons and all the rest of it, and how they've been accumulating gold. But I think at the margin, what we have seen is a lot of central banks are actually taking a very, very negative view on the fiat currency system, and they're just looking to protect their own currencies. So this is a time, I think, of crisis, really, DK. And on top of that, we haven't even touched on the developing war between Russia and NATO. I mean, this week has been bad. It really has been bad. And our Prime Minister at the moment is in Washington, or he will be tomorrow. I think it's today anyway, talking to the US government about upping the availability of cruise missiles and all the rest of it to the Ukrainians, so the Ukrainians can attack Russia from the inside, guided, of course, by NATO personnel, NATO satellite technology and all the rest of it. I mean, this is NATO versus Russia. I mean, let's not mince any words about it. This war is escalating. It depends what Russia does. But I mean, it seems to me that this is an extremely dangerous situation, which could easily escalate into a nuclear confrontation. This is not good.
Well, you've cheered us up with this.
Silver is often seen as a safe haven asset, but what many people don't realize is its critical role in modern technological landscape. It's not just a metal for coins and jewelry. It's a key component in some of the most cutting-edge technologies shaping our future. From renewable energy to high-tech electronics, silver's unique properties make it indispensable, and this rise in industrial demand could be a game changer for its price in 2024. Let's start with one of the biggest drivers of silver demand, the solar energy industry. Silver is a crucial material in the production of photovoltaic cells, which are used in solar panels to convert sunlight into electricity. As the world races to combat climate change, the push towards renewable energy sources like solar power has never been stronger. According to recent data, the demand for solar panels is set to grow by nearly 20% annually over the next few years. This growth is already straining the supply of silver, as each solar panel requires a significant amount of the metal. With more countries adopting aggressive renewable energy policies, the demand for silver in this sector alone could skyrocket. But it doesn't stop there. Silver is also a key component in the production of electric vehicles, EVs. As governments around the world push for cleaner transportation solutions, the EV market is set to explode. In fact, some estimates suggest that global EV sales could triple by 2030. Each of these vehicles requires a considerable amount of silver for its electrical components, batteries, and charging stations. This surge in demand, coupled with the existing pressures from the solar industry, could lead to a significant supply squeeze. Now, add to this the role of silver in 5G technology. As we move into a more connected world, the rollout of 5G networks is expanding rapidly. Silver's superior conductivity and durability make it an essential material for 5G infrastructure, particularly in the production of semiconductors and printed circuit boards. The global race to establish 5G dominance is on, and this is yet another area where silver's demand is poised to increase. However, the supply of silver isn't keeping pace with this booming demand. Silver mining is becoming increasingly difficult and expensive, with some of the richest deposits already depleted. This creates a perfect storm: rising demand from emerging technologies and a tightening supply. It's a classic supply-demand imbalance that could propel silver prices to new heights. And here's another layer to consider: the geopolitical landscape. With the ongoing trade tensions between the U.S. and China, access to essential materials for technology production could become a strategic concern. Silver, being a key input for many of these technologies, could see its price affected by any disruptions in the global supply chain. So, what's the bottom line? As the world transitions to a greener, more connected future, silver's role in emerging technologies is becoming more critical than ever. If you're looking for an investment that stands to benefit from multiple high-growth industries, silver should be on your radar. The question is, with the demand for silver set to outpace supply, how high could its price go, and are you positioned to take advantage of this potential opportunity?
Janet Yellen, in a sense, I'm inclined to give her the benefit of the doubt and say that she has no alternative but to say what she says. So, she may believe something completely different. But, I mean, there are other areas of government, your government and our government, which are completely delusional. So, I think it would be a mistake to give her the credit, if you like, for just simply lying in ignorance, or being ignorant rather than lying. I think, we are in this credit cycle. The credit cycle is the one that drives the business cycle. The banks are beginning to see, I mean, well, they've been seeing risk for some time, but I think that risk is escalating. They have put quite a lot of their balance sheet into very short-term U.S. Treasury debt by buying T-bills in particular, and maturities at up to a year. Where else do they go? They can't really reduce their balance sheets, unfortunately, for them in aggregate. I mean, an individual bank can, but for the rest of the banks, they can't really do it. And the problem that the US economy now faces is that basically business has no credit. There's credit still being offered to consumers, and there's some credit which is still outstanding, I think, on investments in the stock market. Now, that's, I think, next in line for very sharp reductions. It's not going to be good. But the idea that this suddenly is going to take the pressure off inflation is, that's dreamland stuff, because the point about it is that production is collapsing, and with production collapsing, you get less supply of goods, which happens maybe slightly ahead of less demand from consumers, from strapped consumers. And the other thing which when
it comes to investing in precious metals like silver, understanding market sentiment and historical performance is crucial. Silver has a long history of reacting sharply to shifts in economic conditions and investor behavior. But what does this mean for silver's potential in 2024, and why should you be paying attention now? First, let's talk about silver's track record. Historically, silver has outperformed during times of economic uncertainty and financial crises. Look back at the 2008 financial crisis, for instance. As the markets crumbled and fear gripped investors, silver prices surged from around $10 an ounce in late 2008 to nearly $50 an ounce by 2011. That's a staggering 400% increase in just a few years. This was driven by investors flocking to safe haven assets amidst economic chaos, seeking protection from the fallout of a failing financial system. The same pattern was seen during the 1970s when silver soared as inflation ran rampant and economic instability gripped the world. But why does silver react so strongly in these situations? Unlike gold, which is primarily seen as a store of value, silver has a unique dual role as both an industrial and a monetary asset. This means it's not only a hedge against economic uncertainty, but also a crucial component in various industrial applications. When economic conditions deteriorate, investors look for assets that can preserve their wealth, and silver's affordability makes it an attractive option compared to gold. Fast forward to today, and we're seeing similar conditions brewing. The global economy is facing unprecedented challenges, rising inflation, geopolitical tensions, and a potential recession on the horizon. Investor sentiment is becoming increasingly bearish on traditional assets like stocks and bonds. As a result, we're witnessing a renewed interest in silver, with many investors seeing it as a hedge against economic turbulence. But here's the kicker. Despite its potential, silver is still widely undervalued compared to gold. The gold-to-silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, is currently around 84 to 1. Historically, this ratio has hovered closer to 50 to 1, suggesting that silver is significantly undervalued relative to gold. If this ratio were to normalize, we could see a dramatic increase in silver prices. Moreover, there's a growing sentiment among institutional investors that silver is poised for a breakout. Hedge funds and major financial institutions are starting to take notice of silver's potential, with many increasing their positions in anticipation of a rally. This is a strong signal that big money is betting on a silver surge. And let's not forget the retail investors, the so-called silver stackers, who have been steadily accumulating physical silver over the years. This grassroots movement has gained momentum, especially with the rise of social media platforms like Reddit, where communities like Wall Street Silver are pushing for a silver squeeze. This could create a scenario where physical silver becomes increasingly scarce, driving prices even higher. So, what does this mean for you? If history is any guide, silver has shown time and again that it can deliver substantial returns during periods of economic uncertainty. With the current market sentiment leaning towards fear and caution, silver's unique position as both a safe haven and industrial metal could make it one of the best performing assets in the coming year. Are you ready to take advantage of this potential opportunity, or will you be watching from the sidelines as silver takes off once again?
Monetaryists actually miss entirely is that the value of the dollar actually depends on the faith and credit in it, more so than the quantity of credit in circulation. On that basis, you can see that foreigners are getting the hell out of the dollar. This is why gold is rising. It's the biggest signal that the dollar, I think, is in the initial stages of a fiat currency credit crisis. Do we have faith in the dollar? I don't think so. And, with the war starting up more aggressively between NATO and Russia, it's definitely going in that direction for whatever reason. Russia is actually in a far better financial position than America, because America's starting point is, we saw the August figures for the deficit, but generally, if you look at the amount of debt to GDP is over 130%. The economy is now, run into a brick wall. That debt to GDP ratio is going to start rising very, very sharply because of lack of tax revenue, because of increases in welfare costs and all the rest of it. This is not good. This is not good.
In the face of you mentioned Russia and other nations pivoting away from the US dollar and into real things, commodities and gold in particular. This has been going on now for a number of years, and it seems to be accelerating. In parallel with that, they have been publicly stating that they're working on developing a new trade settlement currency. Can you bring us up to date on your latest analysis of that and how the implications of that for the dollar and for the West?
Yeah, I think that a lot of the commentary on this has been misguided. There is an assumption in certain quarters that there will be a new currency on the agenda at Kazan, which is the October summit for BRICS. I don't think there will be. There may be some mention of it on the basis that an update of planning and so on and so forth. But
while long-term trends are crucial for understanding the broader outlook for silver, short-term triggers can often be the catalysts that ignite a rapid price surge. So, what immediate factors could drive silver prices higher in 2024? Let's explore some of the key events and market dynamics that could send silver skyrocketing in the coming months. One of the most significant short-term triggers for silver is the Federal Reserve's monetary policy. Recently, the Fed shocked the markets with a larger-than-expected 50 basis point interest rate cut. This move was aimed at supporting the economy amidst signs of the slowdown in easing inflation pressures. But here's where it gets interesting. The Fed is now signaling the possibility of even more rate cuts in the coming months. According to the CME FedWatch tool, there is a 65% probability of another rate cut in November. For silver, this is potentially game-changing news. Why? Because lower interest rates weaken the US dollar and reduce the opportunity cost of holding non-yielding assets like silver. When rates are low, investors look for alternative stores of value, and precious metals often become the go-to choice. This shift in monetary policy could trigger a flood of investment into silver, pushing prices higher as investors seek to protect their wealth from a depreciating dollar. But that's not all. Geopolitical tensions are another major short-term driver for silver. The ongoing conflict in the Middle East, particularly the recent escalation between Israel and Hezbollah, has created a climate of uncertainty. In times of geopolitical instability, investors flock to safe haven assets to hedge against potential economic fallout. Silver, with its lower price point compared to gold, becomes an attractive option for those looking to diversify quickly. Moreover, supply chain disruptions could play a crucial role in a short-term silver rally. The recent global semiconductor shortage, for example, has highlighted the fragility of supply chains in critical industries. Silver, being a key component in electronics and technology manufacturing, could see its supply squeezed if these disruptions continue or worsen. With the demand for technology products on the rise, any hiccup in silver supply could lead to a rapid increase in prices as industries scramble to secure the metal they need. Another immediate factor to consider is the ongoing trend of dollarization. Countries around the world are exploring alternatives to the US dollar for trade and reserves. This trend, if it accelerates, could weaken the dollar further, making dollar-denominated commodities like silver more attractive on the global stage. This could lead to increased demand from both investors and central banks looking to diversify their holdings. Lastly, let's not forget about market psychology. The sentiment around silver is already turning bullish, with more investors viewing it as a potential hedge against both economic instability and inflation. As more people jump on the silver bandwagon, the momentum could build, leading to a fear of missing out or FOMO effect, where the price rally feeds on itself as more and more investors pile in. So, what should you take away from all this? The stage is set for a potential silver rally with multiple short-term triggers that could send prices soaring. From dovish monetary policies and geopolitical tensions to supply chain issues and a weakening dollar, the conditions are ripe for a surge in silver demand. The question is, will you be ready to capitalize on these opportunities, or will you be caught off guard as silver makes its move?
What people have latched onto is a proposal for a new currency, which was called the unit. Now, this currency was the paper on it was produced jointly by a Russian and a Chinese individual. But when you look into the background of these people, they are actually private sector investment managers. This is not, a joint government, Russian Sino operation at all, which the names you would think suggest it is. No, it's not at all. And furthermore, it is quite clear that the authors of this unit paper really don't understand credit. They don't understand the relationship between money and credit. They have recommended a backing of 40% gold and 60% currencies, which are valued on a day-to-day basis in terms of gold, and the whole thing put on some sort of blockchain. There is this tendency, I think, to overcomplicate really what essentially is a very, very simple relationship. The way a gold standard works is really extremely simple. A currency must be freely exchangeable, either in terms of cash or in terms of bank deposits for gold at the central bank. It's actually as simple as that. And it's easy to put in too. And it's easy. We do know how to manage gold reserves. You do that by using the interest rate to manage the gold reserves. You do not use interest rates to try and manage economic outcomes. That is a huge, great mistake. As we've seen, time and time again, interest rate policy has achieved absolutely nothing. If anything, it's probably made things worse. So it's all about having sufficient gold reserves in the background to give confidence to people that they don't need to cash in their dollars or rubles or whatever it might be for gold. And that is maintained by the issue department actually having control over interest rates. There are various other aspects of this, but they are relatively...
After exploring all the factors that could impact silver prices, it's time to bring it all together and make sense of why 2024 might be the year we witness a historic silver rally. So, what makes this moment different? And how could these converging forces lead to an explosive rise in silver prices? Let's start with the big picture. We're currently facing a unique convergence of economic, geopolitical, and industrial factors that are all aligning in silver's favor. The global economy is at a crossroads, with central banks grappling to balance inflation and growth, governments pushing for technological advancements, and nations rethinking their reliance on the US dollar. These dynamics create a perfect storm for a shift in how assets are valued and what investors prioritize. And silver, with its dual role as a precious and industrial metal, stands to benefit immensely. One of the most compelling reasons for silver's potential breakout is the threat of de-dollarization. If more countries continue to move away from the dollar as the dominant reserve currency, we could see a significant revaluation of assets traditionally tied to the greenback. Silver, being one of those assets, could experience a surge in demand as investors and central banks look to diversify their holdings. The development of a potential BRICS reserve currency, backed by a basket of commodities or even precious metals, could be a game changer that accelerates this trend. While this might sound like a long-term shift, the mere anticipation of such a change can send shockwaves through the market, pushing silver prices higher in anticipation. But it's not just about geopolitics. The global push for renewable energy and technology is creating unprecedented demand for silver. Solar panels, electric vehicles, 5G technology, all of these advancements rely on silver's unique properties, with supply struggling to keep up with demand. We're looking at a scenario where even a small increase in industrial consumption could lead to a significant price spike. This is not just speculation. It's a logical consequence of the supply-demand imbalance we're seeing unfold right now. Then there's inflation. Despite recent efforts by central banks to control rising prices, inflation remains a looming threat. If inflation continues to outpace wage growth, eroding purchasing power, investors will increasingly turn to assets like silver that can protect against currency devaluation. The Fed's dovish stance, with potential further rate cuts on the horizon, only adds fuel to this fire. Lower interest rates reduce the opportunity cost of holding non-yielding assets like silver, making it an even more attractive hedge in an inflationary environment. Finally, let's consider the market sentiment in psychology. Silver has a history of dramatic price movements, often fueled by shifts in investor sentiment. With the current buzz around silver in investment circles, the stage is set for a potential silver squeeze, a scenario where increasing demand, coupled with limited supply, leads to a rapid surge in prices. This could be further amplified by retail investors rallying around silver, similar to what we saw with the Wall Street bets movement in early 2021. If this momentum builds, we'd see a parabolic rise in silver prices as both institutional and retail investors rush to get in on the action. So what does this all mean? It means that 2024 could be a pivotal year for silver. With the dollarization trends, technological demand, inflationary pressures, and market sentiment all aligning, we could be on the brink of a historic rally. For investors, this is not just about riding the wave. It's about understanding the underlying forces at play and positioning oneself to benefit from the potential surge in silver prices. If you're considering adding silver to your portfolio, now might be the time to act. The conditions are ripe for a breakout, but remember to do your own research and consult with a financial advisor before making any investment decisions. And don't forget to subscribe to our channel for more insights like these. Together, we'll navigate these uncertain times and find opportunities in the ever-changing markets. And always remember, this is not financial advice, just an informed perspective on the potential that silver holds for the future.
Simple. And I wrote a paper on this for my Substack readers, which came out yesterday. Yes, yesterday. So I think that the whole of this trade settlement currency thing has been blown up unnecessarily. And in fact, it's actually very easy for Russia and China, perhaps, to deal with this. I mean, if they were minded to do so, they would say, take 100 tons, and they wouldn't need more than that. Probably even 50 tons would do it, of bullion to back a new trade settlement currency, which you could call anything you like. I mean, you can call it the unit if you want. But the point is that the currency is credit and it is anchored to gold. So it have to be readily realizable in gold in order to give it its credibility. Just, it's very, very easy to set something like this up and then say to, BRICS or SCO members or whatever, if you want to use it, it is there. If you don't want to use it, that's your choice. I mean, it's really as simple as that.
Alasdair, you are on top of so many aspects of this, poised as you are between the East and the West there in your on your island enclave of the UK. Can you tell people how they can stay in touch with you so that they can follow your continued analysis of these situations as they accelerate?
Yeah, the best way to do it is to subscribe for my Substack, which is alasdairmacleod.substack.com. Google it, you'll find it. And I'm glad to say that that's growing really quite rapidly. I have a mission really to keep people informed and educate them about money, credit, economics, and geopolitics, which are now such an important part of the pricing in precious metals markets.